Today, we're going to be going over the latest acquisition that Well Health made, and this sent the stock soaring to $9.80 yesterday. However, the stocks dropped back down to around $8.80 today, so I'll be giving my thoughts on the acquisition as well as where I think Well Health stock is headed in the future. If you guys are new here, my name is Daniel, and here on this channel, we talk about stock market investing with a focus in Canadian growth stocks. And well Health Technologies is one of my favorite Canadian growth stocks out there. So much so that I decided to sell off all my dividend stocks and ended up trying to put around 20 to 40% of my portfolio in Well Health stock. As of today, Well Health makes up about 20.65% of my Wealthsimple trade portfolio. When this latest acquisition was announced, I was a little bit unsure as to how I felt about this acquisition. And I guess I just didn't really know CRH as a business, which is a business that they acquired. If you're interested, you can search up CRH Medical Corp on Google, or you can check out cedar.com or cedar.ca for some of their financial filings, MD&As, as well as annual reports to read up on this business. I myself took a couple of days to dig into CRH to see if I could understand why Well Health ended up buying this company. So for the rest of this video, we'll be talking about CRH and well Health Technologies and what synergies they can have together. First off, for those of you guys who don't know what CRH Medical does, just like I didn't know a couple days ago, CRH Medical operates in two different segments that I could find. Their first segment of revenue is the largest, making up about $110 million per year. And this is their anesthetics for endoscopic procedures. So basically, if people need an endoscopic procedure done, it's like sticking a camera up their butt and just to see if there's any sort of issues in their GI tract or in the colon. And typically for this procedure, anesthetics are required, otherwise it would probably hurt a little bit. And with the aging population and more people recommended to get endoscopic procedures done just to check if there's like colon cancer present or just other GI tract issues, this is going to be a growing industry going forwards. And the one thing that I've been thinking more about with these health tech stocks is the fact that baby boomers are reaching that age of around like 60 to 70 years old where a lot more health complications happen. And for this reason, I do believe that endoscopic procedures will continue to be on the incline for at least the next 10 to 20 years. Currently, CRH services 69 ASCs and GI clinics, and this is within 13 states. So it seems like CRH has a fairly large presence in the USA, which is attractive for Well Health Technologies. On top of this, they have another revenue stream from their O'Regan system. And the O'Regan system helps cure hemorrhoids. Hemorrhoids, again, happen in your rectum, and they're basically these like swelling of blood vessels causing this abnormal growth in your rectum. And what this O'Regan system does is go into your rectum and it will place a rubber band around the hemorrhoid, which will eventually fall off because there's no blood flow going to that skin growth. If you want to watch a video on how this works, you can go check it out on CRH Medical's website. I personally watched it and learned a little bit, however, it was a little bit graphic, so just be warned. Other treatments out there for hemorrhoids are topical creams or other sort of injectants which don't actually address the problem. They're more for pain relief. And then there's other banding systems out there which use some sort of metal tongs which are not very comfortable, as well as require a lot more prep work and there's more error in the procedure. The O'Regan system was invented in 2003, but more heavily marketed later on. There was a study in 2007 showing between 60 patients, only 6.7 patients experienced some sort of mild pain, and the system was very effective for treating hemorrhoids. And overall, the study recommended this treatment procedure. CRH estimates that they could probably generate around $100 million of revenue per year from the O'Regan system when they fully ramp up the marketing and sales. And currently, the O'Regan system only makes up $10 million of revenue each year. So we can see a 10x in this revenue stream going forwards. So looking at CRH as a business and Well Health Technologies and how they'll have some sort of synergy, I think that it's possible that CRH could be selling their anesthetics as well as the O'Regan system into Well Health clinics in Canada. That wasn't specifically stated, but that's just my theory. Well Health did state in the news release that they're planning to use their expertise in digitization and modernizing clinics and bring the skill over to all the clinics that CRH is in contact with or owns themselves. Another great synergy between these two companies is just in the way they operate. CRH has been on an M&A spree ever since like 2014, and Well Health Technologies, as you guys know, they've been buying up companies left, right, and center. So I think from this perspective, both management teams will get along quite well. Another thing is, if we look at the deal size here, we can see that CRH is being bought out for around 373 million Canadian dollars. And that's a fairly sizable chunk of change. In fact, Well Health Technologies had to raise an additional $295 million, which is their largest round of financing, and they raised it at a price of $9.80. This round of financing was led by Sir Li Ka-shing, and the fact that he was willing to go in at $9.80, basically paying a premium of 25% on top of the price that it was trading for the past 5 days prior to the announcement. So I think this is a major thing to take note of, which is why the stock popped to $9.80. But later on, I'll get to why I think the stock has dropped from there. I do think that this is a bullish sign just in general, that the fact that there were underwriters as well as their favorite investor, Sir Li Ka-shing, was willing to go in to buy in at a price of $9.80, which really is validating Well Health Technologies and their management team to allocate capital. And looking at CRH's stock price, it's been falling ever since 2017. At their highs, they traded around $10 to $12, and when Well Health announced their acquisition, the stock was trading around $2. However, they were willing to pay a premium of $4 per share, which represented an 80% upside prior to the date of the announcement. But even so, Well Health Technologies still got these shares for around pre-pandemic prices. So I think this is a pretty good deal for Well Health Technologies. So the price that they paid for CRH was $373 million, and CRH generates revenues of around $120 million per year. This is based on 2019. If we look at the trailing 12 months revenues, it adds up to around $134 million. Through this acquisition, they've instantly increased the revenues per year from around $100 million per year to $220 million per year. But Well Health Technologies was not just after the revenue growth, they were also after the cash flow. And CRH in the past 4 quarters, according to Finbox, reported around $10 million of free cash flow from operating activities. So this is roughly around $40 to $50 million based on the trailing 12 months. And if you guys know Well Health Technologies, they love free cash flow. And the reason for this is Well Health Technologies is going to continue to acquire companies. And if they have good free cash flow, this will allow them to finance their acquisitions through their current businesses instead of having to go out into the markets and raise money. So I think basically they're buying out CRH as a cash cow to be able to continue to generate free cash flow for the business so they can use this cash to buy out even more businesses down the road without diluting shareholders. And that's the ultimate goal of Well Health Technologies. They're trying to be efficient allocators of capital and trying to raise as little money as possible. Although that wasn't possible in the early days where most of their businesses didn't generate that much free cash flow. But with CRH, they're taking one step in the right direction. And I mentioned before, CRH is going to be one other way that they're getting into the American medical system. They have Circle Medical, which is an amazing company backed by Y Combinator, and now they have CRH, which has a pretty far reach into the US medical system. But we all know they've still only scratched the surface in the US medical system. The US medical system is massive. It's probably a multi-trillion-dollar market, so I think they have a lot more room to expand, and I'm very excited for Well Health Technologies going forward. Now looking at the stock, I personally think it's sold off from $9.80 because people are looking to take a profit. They saw that Well Health was consolidating over a period of time longer than they expected, and now there was a boost in stock price, so they're like, let's cash out now and buy into smaller penny stocks. And right now, if I didn't have a position in Well Health Technologies, I'd look to start a small one and continue averaging them. I don't think all the selling's over yet because they saw a huge sell-off on the day that they made this announcement, and they went from $9.80 all the way down to around $9 flat. And I think there's still going to be more selling because people are going to realize that Well Health is not performing like all the other penny stocks, and there won't be an instant like 20% gain the next day. So instead right now we're shaking out all those paper hands, and after that happens, I think other people coming in or looking to get into Well Health Technologies will see the fact that the latest financing round was conducted at $9.80, and this was a massive financing round. Then people will start buying into the stock and push the price over $9.80, well into the $10 range. So that's my prediction for Well Health Technologies. I probably will continue adding to my position over the next couple of weeks, as long as it stays around the $9 mark or a little bit below that. So the few points that you should take away from this video is, first off, CRH is basically a cash cow for Well Health Technologies. The second thing that you should take away is this is a major step forward for Well Health Technologies into getting into USA clinics. The third thing that you should take away is that CRH is an active M&A company just like Well Health Technologies, which will help them expand even further into the US market. And the last thing you should take away is that CRH and Well Health Technologies will have some organic and inorganic growth synergies that are coming ahead, which will make CRH's business even more profitable than it was before. So those are my latest thoughts on the acquisition from Well Health Technologies, and there's probably more things that I missed. Let me know what your thoughts are down below about Well Health Technologies and CRH Medical. As well, if you want to hear more thoughts about Well Health Technologies in real time, you can check out my Discord group, which is absolutely free. If you're new here and haven't watched my other Well Health Technologies videos, check these two out on the screen. If you're there, I'll see you there. If not, keep up the grind and have a great day.